If you speak to experienced Nigerian investors, not first timers or people chasing the next hype estate, but people who have actually held assets through policy changes, currency swings, and market shifts, you notice something interesting. Their portfolios are not random, they are structured. And almost always, they contain three specific types of assets, each serving a very different purpose. Today, I'm breaking down those three asset types and I'll explain why the last one is the most important you need to have in your portfolio, especially in Nigeria. One of the biggest mistakes that investors make is assuming that every property should do everything at once. Should grow fast, generate rent immediately, and feel secure long term. And that almost never happens. Smart investors don't look for perfect assets, they build balanced portfolios where each asset has a job. So let's start with the most popular one, the growth assets. These are properties bought primarily for capital appreciation, not income, not immediate comfort. In Nigeria, growth assets are usually found in emerging corridors, infrastructure led zones, early stage locations where demand hasn't fully arrived yet. So think of areas before the road is completed or before airport gets to the area, before commercial activities in the area explodes. Those are growth assets, and growth assets are patient assets. They reward timing, not urgency. But here's the reality that most people don't like to hear. Growth assets are volatile. They don't make you wealthier in the short term because they depend on government execution, private sector follow through, and time. And this is where many Nigerian investors get stuck. Their entire portfolio is growth based, which means that they are rich in projection but exposed in reality. The second category is income assets. These are properties designed to generate consistent cash flow. Think of rental apartments, short let units, and commercial properties like shops, complexes, and so on. Income assets are useful, but they are often misunderstood because income doesn't automatically mean security. Maintenance cost rises, tenants fluctuates, regulation changes. Income assets work best after you already have anchor stability in place. Now let's talk about the most important asset type in any investor's portfolio, the anchor assets. These are assets located in established, high demand infrastructure ready neighborhoods where value is already proven. Anchor assets with stable occupancy, active transportation links, and mature residential development form the foundation of every smart investor in Lagos. And why are they crucial in your portfolio? The first thing is capital stability. Because Lagos is a fast-paced market, anchor assets hold the value when policies or market cycle shifts. Another thing is because of liquidity. If you need to sell your property quickly, anchor assets have ready demand in the market and they have real comparables. And then we have the portfolio confidence. Anchor assets let you sleep well at night when policies change, when inflation spikes, and when markets pause. While growth assets excite you, income assets pays you, but anchor assets protect you. This is why experienced investors build their portfolio around anchor assets, not the other way around. Now, if you study any serious Nigerian investor portfolio, the structure is usually clear. Discerning investors do something simple but very effective. They secure one solid anchor property in a mature Lagos neighborhood. They add growth assets for positioning before full infrastructure arrives and while it compounds over time. And then they add income assets strategically for cash flow. This creates stability now, appreciation later, and cash flow in the long term. Now, if you're the kind of investor that values a structured portfolio, then you already understand why locations like Ibejuleki are getting serious attention. It is one of the few emerging corridors where growth opportunities, anchor level stability, and future income potential all intersect in a way backed by real infrastructural development. If you'd like to explore how to structure your investment within the Ibejuleki corridor to fit into these three asset types and you want guidance in picking the right category for your portfolio, drop a comment or put a call through to us. And if this video gave you more clarity on how to structure your portfolio, hit the like button, subscribe, and share it with someone who needs to stop buying assets blindly. Thank you, and I'll see you on the next one.